Morning. I'm Manju Ganeriwala, and with Trustee Lara Abrash, I serve as co-chair of the FAF's Standard Setting Process Oversight Committee. I would like to welcome our stakeholders and observing today's meeting. Before we move to our meeting agenda, I want to remind everyone of our due process correspondence procedure and form, both of which can be found on the FAF website. As you've heard us previously mention, these measures are meant to make it easier for stakeholders to raise potential concerns, if any, about compliance with the due process procedures of the FASB and GASB. Also, I want to direct our listeners to the agenda and meeting materials for this session. You can find these on the FAF website under the Meeting and Events Calendar subsection. Now, moving on to today's meeting agenda, the committee will cover the following items: GASB Report, FASB Report, FASB Liaison to the PCC Report, PCC Meeting Observation Report, and other meeting observations reports. Now, let's begin with our first topic. GASB Chair Joel Black. He's going to give the first report. Joel?
Thanks, Manju. As always, thank you to the Oversight Committee and all of the trustees for lending their time and expertise to this important function. I'm going to cover some of the highlights. Alan and I are going to cover some of the highlights of the activities of the board, the GASB, during the first quarter of 2025. We'll walk through, status of projects, things that happened during the quarter, with our projects, with our research, with our PIR activities. And at the end, I will provide a high-level overview of the gap utilization research that we completed back at the end of last year or earlier this year. Highlights-wise, you can see on master page 53, for the quarter, we issued a preliminary views document for due process on our going concern project. Title doesn't include the words going concern: severe financial stress and probable dissolution disclosures. Also, last quarter, we talked about 3 due process documents that we had issued, and those comment periods came to an end during the first quarter. And later in the presentation, Alan will kind of give you a summary of input to date on those various projects and the comment letters we received, et cetera. We got a lot of good feedback, and we appreciate everybody that participated in that. So if you move to master page 55, you see an overview of our agenda, roll forward of the agenda. We have the 1 due process document issued. That's the going concern preliminary reviews that I discussed. And then we have 2 final documents that were issued. So 2 things that were concluded. 1, the aforementioned gap utilization research was an other research activity. We consider that to be concluded. So that is coming off, and the final report's on the website, and you'll get the summary later. And then post-implementation review-wise, Alan may mention this again, but we presented the PIR results of our PIR on fair value standards, Statement 72, to you last quarter. So we do have finalized that report. It's out on the website and consider that done. So those are the 2 kind of final documents going off of the agenda. So if you then move to master page 56, I'll turn it to Alan to start an overview of kind of what we've been doing on each of our projects.
Thank you, Joe, and I appreciate that. If you looked on slide 56, you'll look at what we have, our comprehensive projects, which we only have 1. Of course, when you think about it, it's revenue and expense recognition. So it's both, which makes it the comprehensive project, because it's both revenue and expense. The main thing here is we've moved through, we're dealing now with transactions with performance obligations. And that should sound familiar because it is related to and somewhat based on topic 606 in the FASB space. And what we're really working through right now is how do we take topic 606 and apply it in the government space, and how we work through that and make sure it really does apply in the government space. But it would be fair to say that a lot of what we're doing related to performance obligations, the words topic 606 come up a lot in those board papers, as it should. So we continue to work through that. This project is outside the 7-9 year range. It's going to stay outside the 7-9 year range. That's just due to the size of this range and that benchmark being a benchmark we just couldn't hit for this project. So that's RAR. If you turn to what we call our major projects, there's 2. One is infrastructure assets. Infrastructure assets went out for public comment. The comment period ended on January 17, 2025. The good thing, we got 66 comment letters. That's really, really good. We're really happy with that. There was a large number of comment letters that came from users. We were really happy with that. We also had 3 public hearings and 1 user forum. We held those in February. We started redeliberations last month around definition and scope. We'll continue through recognition, measurement, notes, and trying to get us to what will ultimately be an exposure draft for the next stage for that project. One thing I'll say about infrastructure, because you're going to hear it come up a couple times, infrastructure, going concern, implementation guide, subsequent events. We had 4 due process documents out at the same time over the course of the end of last year and beginning of this year. We thought it was right to get them all out. And, let's not hold the product up because you're gonna have more than 1 due process document. I think Rich has said the same thing, but we staggered the comment period dates to try to give folks the ability to answer those and digest them, but still give us good responses. The 100-day comment period for infrastructure is a great example where we end up with 66 responses. So we feel really good about that. So we think we did a good thing getting them out there, but then staggering the response dates. So that's infrastructure. We'll continue that to get to an ED. Going concern, can't say much here. It's out right now for public comment. It's a preliminary view. That comment period will end at June 30. So another example of how we spread out the end of the comment periods. The next slide will just show a visual, really a representation of what we did for infrastructure. Just the number of interactions. If you think of the number of individuals, 119 different people, 161 different stakeholders that we talked about during the development of the PV, 66 comment letters, 33 surveys, 16 research interviews, 3 public hearings, 1 user forum. The numbers probably don't mean as much as just the amount of effort it takes to get feedback in every way we can, in every channel we can. And this just shows you the different channels we're trying to get the feedback. So I think it's really representative from that standpoint. We're going to have something very similar when going concern ends up out of the comment period in June. We'll have something very similar to this later on during the year and probably have very similar numbers, even though it might be that going concern is severe and distress ends up with even more comment letters than this one did. So we're looking forward to that. The last set of products would be practice issue.
Alan,
Yes, sir.
I'm sorry, can I interrupt you?
Yes, of course you can.
If you look at this infrastructure slide on page, master page 58, you'll see that the users are in gray. And we've talked a lot about how over the years, prior to me coming here, it's always been harder to get users to participate in the due process and write comment letters. We do have 10 comment letters from users in this project out of the 66, which is a lot actually. But I think by showing the due process and all the different interactions we have, what you're seeing is concept statement 7 being implemented through the surveys and the research interviews that are both highlighted. Those are very user focused. So users are giving us their input in different ways. They may not be comfortable writing comment letters, but in taking potential disclosures out to them and asking them how they would use them, we're touching them, we're getting their input in different ways. And so I think showing the due process collectively like this and not just only focusing on the comment letter shows kind of that diversity and how we get all the different stakeholders to participate.
No, Joe, I appreciate that. I probably
That's very helpful. Thank you.
I should probably just even pile in a little bit more in the sense that Jeff, our vice chair, arranged multiple meetings with the product team, and I was even in some of them, with specific user organizations, just to make sure even if they weren't going to be able to write a comment letter, we knew what their feedback was. So those would be in that stakeholder interaction numbers. But there were instances where Jeff actually helped arrange us to go to specific users, go meet them, go to their offices, sit down and talk to them and walk them through this document and then get their feedback. So that's even another way we were trying to get user feedback during this whole process. Again, practice issues. There's 2 there. Subsequent events, 100-day comment period ended in February. 25 comment letters. 25 comment letters on a practice issue project is probably the norm. That's not less than normal, not more than normal. That's probably what we would expect to have gotten. We feel really good about that. We're walking that through the redeliberation process. And then finally, the implementation guide. That again, different comment period. You see all these varying, number of days of the comment period. 24 letters, again, 24 comment letters for an implementation guide is probably pretty normal. We started redeliberating that in March. We're going to try to get the implementation guide out by June. If you think about that, try to get that out so it's available for our stakeholders, preparers, and auditors to use when they start the next reporting cycle, which theoretically would start in July. So that's really important for us to get that done. You'll see 2 slides here that for subsequent events and then one the implementation guide. Again, just visuals of the number of interactions and the number of interactions we had both with subsequent events on slide 60, but also with the implementation guide on slide 61. They're going to differ a little bit just in the sense of who responds to a practice issue document, who responds to the implementation guide. But again, it's just trying to get you to show the variation and the variability in who responds and the different type of entities that respond. So you know we are getting that feedback. Again, the numbers in terms of 24 comment letters, 25 comment letters is pretty typical. That would get us through our projects, and we have one more technology project that I think Joel's going to walk folks through, unless anybody's got questions on our actual tech agenda.
Thanks, Alan. Technology project, this is master page 62. This is our taxonomy. We've talked to you about the taxonomy work we're doing. We talked to you last quarter that we broke it out. We had moved that project along foundationally to have a path forward to break it out as its own project, but it's not a standard setting project because we're not changing or adding to GAP in any way. It's not going to be GASB statement number 1 or whatever. And so we created a new type of project called a technology project. The actual title of it is Voluntary Digital Financial Reporting. In our view, I think one of the most important words there is voluntary. This isn't something we're requiring governments to do, but should governments want to report their information in a more modern, digitized way, we wanted to provide some data structure that uses GAP, that builds on GAP, that retains the relevance of GAP, so that they would have that in that reporting out to different users, their information in different ways, or for software providers, for example, to use as they're providing subscription information to users. They can use our taxonomy that would allow the digital information to be structured in a way that ensures GAP is utilized and presents the information in a reliable, relevant way to the users if they've chosen to use our data structure. So again, something we've talked about with you a number of times that we continue to feel is important. It does continue to progress and move along. We did update the SEC Office of Municipal Securities on our progress to the extent as the Financial Data Transparency Act, or FDTA, moves forward. They're interested in working with us. We continue to update them, and we did meet with them in the middle of March to update, to give them an update of where we were. So if you move to the next page, a couple of kind of important things that are going on with the project. One is because we are now, we feel like we've got a good foundation. We're starting to move forward with detailed pieces of it. We've gotten input from people external to our organization throughout the process as we learn, as we grow, as we figure out what this taxonomy means, how we should do it, certain decisions we should make. But we wanted to formalize that in a way as we're now starting to maybe move more quickly through individual details. And so we're going to form a taxonomy consultative group. You can see the makeup of that here. I would say by next week, we will have about 20 to 21 of these 25 members on board. They are scheduled to then have their first meeting probably in June. But you'll see this is similar to a task force. So they're appointed by me to inform the staff. So largely they will meet with the staff. The plan is for them to meet with the staff quarterly in virtual meetings and provide input. They'll meet in person twice a year. One of those will be with the board, the GASB board, which we are planning to do maybe in the fourth quarter of 2025. And I think one of the unique things about this group is we are normal in our task forces, usually spreading among preparers, auditors, and users. And we've done that here, but we've added a fourth group called, technology group, technologists, data people that are used to using this, so that ultimately, many of them are going to be the users, the consumers of this rule, this taxonomy. And so we wanted them to have input into it along the way too. So we've added some of them to this consultative group as well. Then if you move on to master page 64, I think this is a good picture of phase 1 of the taxonomy, which presents the minimum GAP financial report, minimum GAAP requirements of all the components of the financial report, which would include the statements, the notes to the financial statements, and all the required supplementary information, including the MD&A. So this top part, or most of this graph, apart from the architectural design at the bottom, this is what we ultimately have to get through to have a kind of complete taxonomy for the minimum GAAP requirements. And so you can kind of see where we are. In blue are highlighted parts of the taxonomy that we plan to issue a due process document on in December of this year. So by December of this year, we will have all of those components of the taxonomy in good shape. Really, the main thrust of this first due process document is that architectural design, all those data modeling decisions that we've tentatively made. At the bottom there, that's where we're really trying to drive and get input. But in order to make some of that stuff real, the due process document will have details of different types and parts of the financial report, whether it be very structured data like a financial statement or very unstructured data like a note or the MD&A. We wanted to include and have a kind of close, I don't want to say final version, but a good kind of fulsome version of those parts of the taxonomy for people to kind of understand what an end result might look like and help them provide us with input. So that's kind of where we are and where we plan to be with a due process document out for exposure to even a broader external, all of our stakeholders in probably December of this year.
Joel?
Yes.
So this design, on the one hand, I think is exceedingly clear and well organized. On the other hand, it also speaks to the substantial underlying complexity of this task. And I'm curious, when you talk about getting input, and you mentioned the various colored boxes, how do you think about the balance of getting input on the overall structure and then letting your team sort of work through the technical details of each little bit of taxonomy versus getting input on every box on this page?
Well, I think every box on the page, is why we will probably have due process documents along the way so that it comes out in pieces and not in really big chunks. But at the same time, it is a unique aspect of this, that the output and the input we're seeking comes from accountants who don't really know what a taxonomy is, and taxonomists are technical people who don't really understand the accounting. And so we've tried to learn some of how the FASB does this or IFRS does this, as well as our own kind of spin on presenting to both groups, maybe in separate sections of a due process document is how we're thinking about it now, so that the accountants have it presented to them in one way. They can focus on the accounting ideas, and then the technology people can focus on the technology part and give us feedback on that. So we are trying to think about those different audiences and present to them differently.
Thanks. That's quite an undertaking.
It is.
And I realize we're not discussing policy here, but just looking at this page, it's pretty strong evidence for why ultimately this should be done in one place and one place only. Yeah, in terms of
Especially when GAAP covers all of this already, right?
exactly.
It kind of speaks to the importance of us doing it as opposed to somebody else trying to use GAAP and put their own spin on it.
Agreed. Strongly.
Alan.
Yeah, I was gonna say real quickly, Ed, to your question, I think the team is looking at this as where we really need feedback on is that architectural design, the foundation, the building blocks of how we're gonna build it. But if you give them that without anything else, they might not know how to think about it. So you give them the architectural design in the document, but then you also give them like those 5 boxes. So now they can see how the design would actually articulate in real concepts and real statements without having to give them everything, to Joel's point. And so that first document is really about making sure we get the foundation right, because if we don't get that right, it's gonna be hard to build the rest. But you give them examples. Does that make sense?
Yeah, it makes a lot of sense, actually. And yeah, I think it makes great sense.
Before we move on, any other questions on our taxonomy digital financial reporting project? All right, Alan's going to keep us going.
And I'll talk on just really on slide 65 for a second, just pre-agenda research. And I'm just going to talk about one of these topics. So really for us, pre-agenda researches, things we're looking at, things we're researching before we decide whether or not we actually need to embark on a standard setting project. And then I want to hear that gets all the attention is cybersecurity risk disclosures. You can imagine from a user standpoint, that gets they look up real quickly and go, okay, we want to know a lot about that. And then from a government standpoint and an auditor standpoint, it's like there's a lot of risk with doing any kind of disclosure related to that. And please don't put a target on our back by providing disclosures, you know, in that under that topic. What I tell people is we're just researching this. We're just saying, what is it? What does it look like? What exists? What do other standard setters do? What's in the public space? To try to determine if there's a project. At this point, we don't know if there is one. This is just do the research. Ultimately, the board will have to decide should there be a project or not. So I remind people, don't make the assumption or don't draw the conclusion that just because we're doing research means we're going to do a standard setting project. We just think it's a really, really big topic. It comes up all the time. You hear governments being the victim of cybersecurity attacks all the time. And so we have to think about it, but that's all we're doing at this point, is doing the research to see if we could or if we should. It doesn't mean that it will, and the board will ultimately have to decide that at a later date. So that hasn't been decided yet. So that's just important to emphasize that when people look at this topic, because this topic elicits really strong emotions and really strong responses immediately. At the same time, we can't not think about it, can't not talk about it. In terms of PIR, probably two things here. Joel mentioned, he's right, we put fair value, statement 72. We did it earlier this year. It's on our website. That one's done. The next one we will finish and we're working on right now is the OPEB one. That'll be a very interesting point because then we'll have the OPEB PIR done along with the pension PIR done. And that's when we can really think about, should we do anything at all related to those two standards? Because you can probably think about them together because they're very, very, very similar. And that one would be towards the end of next year. And so we've got a lot of work left to do on that one. And we continue to put a lot of time and effort in the PIR process and look forward to getting that OPEB one done. Rick.
Hey, just real quick, Alan, on the PIR, and
Yes,
the fair value one is the one that just was completed in the first quarter. Any revelations from that as far as things that came out of that? Do you think, okay, for the next standards, you know, because that's part of the process, right? Is learning from what's been done to see how you might implement it in the future?
No, I think that one showed that our process held well, and we think we followed our process, and the report would suggest that. I think what it comes down to is just, it's almost, and Rick, we're going to do this later. We didn't do this in this product, but it almost says, sometimes you look at some of the disclosures and you start asking yourself maybe the question of, did we need, like with fair value, do I need all the disclosures related to fair value measurement? When it's just measured on a quote on Bloomberg, do I need that as much as when it's some fair value measurement that doesn't have a readily available market, right? It's unobservable measures. And do we need disclosures for both the observable measures and the unobservable measures? I'm not sure that's a revelation in our process, but it does make you think potentially about whether or not there's areas that we could tweak. And again, the report doesn't say we should or shouldn't, but it does at least make you think about that and think about whether or not we should.
Any other questions about the agenda or our activities before I move to gap utilization? Okay, so if you start on master page 68, this is actually a summary of the summary of our gap utilization efforts. The summary and a more detailed report are on our website. This wasn't, we considered it another research activity. It was a research activity that we had a team work on throughout much of 2024. And this was acknowledging that there is no standard requirement to use gap for state and local governments, that ability rests with the sovereign states. Each state can choose whether or not they follow gap and dictate what the local governments in their jurisdiction do from a financial reporting perspective and whether they use gap or not. So periodically, it is good for us to kind of understand, well, how many governments are using gap? Because when you have, you know, depends on who you ask, but according to the Census Bureau, approximately 90,000 units of local government throughout the United States. It's hard to get your arms around that in a quick way, given all the differing kind of requirements that might exist. And so we had a team led by Tammy Waymeyer, who is our senior research manager and kind of our resident academic at the GASB, use really an academic approach. And the ultimate detailed paper that is on our website is an academic paper that they are submitting for publication. I think it's gotten accepted through, I'm not an academic, so I don't know the exact things, but it's gotten accepted into for discussion purposes to maybe get into a journal or something like that. So it's a very detailed kind of report. And so we wanted to provide a summary of it. That's on our website. And this is kind of some of the pages out of that summary. And so master page 69 is really the first part that really describes what we were trying to do. And we used a sample, right? We didn't go and look at all 90,000 units of local government, but we started with, and what you really, the primary objectives were say, what are the different state requirements for different types of governments to use GAAP? And absent a requirement to use GAAP ultimately, or an ultimate requirement not to use GAAP. In other words, if you were somewhere in the middle, what was a determinant that made a government choose to use GAAP, and build a model that would allow us to then determine the number of governments of different types that use GAAP, and ultimately be able to update that model more routinely than the last time we did this was 2008. So it's been quite a while since we've done a study like this. But the objective would be, now that we have this model that Tammy and her team have developed, is that we can update it every couple of years and not wait so long, so that we can see how quickly or not trends are of people moving to or away from or staying steady with how whether or not they use GAAP. So if you go to master page 70, the left-hand side, that's what we kind of all know, right? The reporting requirements really drive it. And in the other summary, we kind of have a breakout of this. But in the end, there are a number of states that require GAAP utilization, although it's not for all local governments, although it's not that many. There's actually only one state that fully requires non-GAAP for some of the local governments in their jurisdiction. But most states are somewhere in between, meaning they lean towards requiring GAAP, but they provide some exceptions, or maybe they're kind of neutral, or they maybe lean towards non-GAAP, but they require some exceptions. The exceptions generally manifest in governments above a certain size, and those thresholds tend to be pretty low, should use GAAP. Governments below a certain size, based on population or more typically revenues or expenses, have the option to use GAAP or not. And so in any of those situations where there's an option, you start getting on this picture more towards the right. And the middle determinant really that we found was, it kind of depends on almost peer pressure, if you will, of what do the organizations that are well thought of in your jurisdiction do, whether that comes from an audit firm or two that are really dominant in a particular place and they strongly encourage GAAP, whether it's a local state chapter of the GFOA or AGA or something like that, that's really a lot of people, belong to. And that's where when people go to hire, they pull from that, or they pull from the state audit department. Is it thought of as a best practice to use GAAP? And so a lot of governments kind of, I want to say bow to that, but use that peer pressure to say, well, the government next to me is using GAAP, I need to use GAAP. That's the kind of gold standard, if you will. So that's kind of a major reason why governments choose to use GAAP. And then on the far right, it's if they're in the debt market or not. And there are academic studies that show that interest cost, bonding cost, is lower if a government uses GAAP. And that corresponds to, if not directly, I think indirectly, that we know in talking to the rating agencies that there is a part of their calculation that debits that I don't want to say downgrades, because there's not a whole like letter downgrade, but in their formula, there's a notch down if they don't use GAAP. So it's a penalty a little bit in the formula, and that ultimately determines their rating. Again, not a full letter grade or anything like that, but it is impactful in their decisions. And that kind of makes sense then, that if you use GAAP, your bond rating is likely to be a little bit higher. your interest costs therefore are likely to be a little bit lower. So we did see that correlation in academic studies, and it kind of shows up in our results as well. So then if you go to master page 71, our
Hey, Joe,
last slide here. Yeah, Manju.
may I ask
Sure.
question before you go on to your next slide? You mentioned there was one state that requires all its local governments to use something other than GAAP, which is kind of unique because generally governments would say, hey, we understand if you're below a certain threshold in terms of population, revenue, etc., that you can use something else. But if you're over a certain threshold, then you must use GAAP. Do you know what the situation was there? Do you know the history background there? Why the state would require make it a requirement to use non-GAAP accounting methods?
Manju, I don't want to speak too authoritatively, but I feel pretty comfortable. It is the state of New Jersey, and it is for the cities and the counties in the state of New Jersey. It's well known that they don't follow GAAP. They follow this thing, financial reporting framework that New Jersey itself created before GASB 34. So GASB 34 in year 2000, I think ish, was around when it came out, was a huge change in the government financial report, created government-wide statements, MD&A, major funds. It really changed the way the financial report looks to be what it looks like now. New Jersey didn't want their local governments to have to do that. So they created a framework that looks a lot like GAAP looked pre-GASB 34, and they've kind of stuck with that and maintained it. Now, there are elements of current GAAP that they have brought into it, but the overall structure, if you kind of remember that old GAAP, they had account groups for fixed assets and long-term debt. They don't have government-wide statements. All of that stuff is not in their cities or county financial reports. It looks like GAAP from the 1980s, say.
But the state itself uses GAAP.
Yep, that's what this next slide shows, because all 50
Right.
states use GAAP. So the state itself does, and actually the school districts in New Jersey follow GAAP. So it's just the cities and the towns by state law have to follow the other framework, the New Jersey specific framework.
Thank you.
So master page 71 is kind of the bottom line results for states, counties, and municipalities, towns, cities, things like that. We have a page in the other report in the bigger summary version that talks about special districts. I didn't include it here because we feel a little bit more squishy about those results, and that's not a technical term, that's Joel's term, because because special districts are made up of school districts, utility districts, economic development districts, all different kinds of districts, and state laws can be harder to find and or are disparate in what they apply for the different special districts. And so while we did accumulate what we could, and we kind of have 30 states maybe requirements for special districts, and we have a number for special districts, because we didn't feel like we got the full population and the full requirements, I kind of didn't include that one, even though it's in the ultimate report. And I think as we update this, say 2 years from now, that's something we hope to get better at, that we hope to have more fully developed our special district knowledge and database so that we can get a clearer number for those special districts. But for the general purpose districts, which are kind of maybe the larger of what people think of, for our government, states, 100% of states use GAAP. For counties, 74% of the counties across the country use GAAP. And for municipalities, cities, towns, et cetera, 71% of those municipalities use GAAP. And I'll highlight down at the bottom, we kind of talk about the coverage that makes, that ultimately results in as it relates to maybe revenue or debt, and the coverage is similar. And I say this because the larger the jurisdiction, even within those counties or those municipalities, the larger the jurisdiction, the more likely they are to use GAAP, and the ones that don't tend to be the smaller ones. So if you look at revenue, or maybe more specifically debt, if you look at those cities and counties, it is somewhere between 93 and 99% of the debt outstanding for the cities or the counties is covered by a GAP report. And when you lump the states in, they are the largest, right? So if you look all the debt outstanding for states, cities, and counties, GAP financial reports cover 99.4% of the debt outstanding. So certainly, while the numbers are 74, 71%, we are covering a larger amount of the municipal securities market or taxpayer revenue dollars than even those percentages would lead you to think. So that's a high level summary. Happy though to answer any questions you guys have about the GAP utilization study. We do plan to update it, say, in a couple of years and see if we see what the trend may or may not look like, try to get the special districts a little better, that sort of thing. Rick.
Yeah, thanks, Joel. Thanks for that. I just wanted to mention first, I think the summary is very well laid out. I mean, there's only a couple of pages. It's great. It gives a lot of information just in those 2 pages. But really, the detailed report is only 40 some pages, you know. And so for those who are interested in that, it's easy to read. It's easy to go through, and there's great information in it. I found a lot of information that either I didn't know or it confirms some of the things that I realized are going on in my state. And, you know, well done, you know, by your folks in putting it together. And I know it's very useful.
Thanks, Rick. Appreciate that. They did do a great job. Tammy's great. Marion.
Marion.
Hey, Joel, would that update include some of the smaller cities that do use GAP but don't issue debt?
The percentages include, our sample included audited governments, right? We had to have an audited financial statement that's how we determined whether GAP was used or not. So if your state doesn't require you to get an audit, and that probably means you're not in the debt market either, then that's excluded. But otherwise, this population includes not just governments that issue debt, but any government that has an audited financial statement, which includes a lot of small governments, depending upon your jurisdiction. Illinois, you know, North Carolina, there are places like that where there is no small threshold. So even small governments have to use GAP, and they would be included in our report.
Thank you.
Thanks, Marion. Ed.
Joel, so first of all, I think this was a substantial, it's funny, this effort was much more substantial and difficult than would be intuitively obvious to people thinking, well, surely we know who uses GAP. And I think it's incredibly important data to have, and it's probably too soon to know this, but I'm curious if you think just the fact that this data is now available and you're making it public, do you have any sense of whether that will shape behavior one way or another in terms of how different governments and municipalities look at the decision of whether to use GAP? Or do you think it's so many other factors affect that this is just information that informs a discussion?
I think that middle box on that last page, the kind of peer pressure one that I talked about, if anything, this would enhance that, right? So if you see this and you know that 74% and 90% of the, 99% of the debt covered, all these people use GAP. GAP must be important. If I'm a state legislature, which is typically where if there's a change, it's going to be driven by a state legislature change in what they require or don't require for the local governments in their jurisdiction, maybe they would be less inclined to do that, knowing now that these are the percentages that, if a large majority are following GAP, and if you move away from that, you're moving kind of away from a norm. Yep. I would hope that this might influence that a bit, although I think if they're talking about it, it's because they've got some pressure from the local governments in their jurisdiction that this is overly burdensome, et cetera, et cetera. And so I don't know if it would outweigh that, but hopefully it would influence it a bit.
Yep. Great. Thanks. Great work.
Thanks, Ed. All right, Manju, that's all we've got.
Well, again, I just wanted to echo my compliments to the team that worked on it. Really great effort. Often we've talked about in meetings, wonder it would be nice to know like who is using GAP in governments and what percentage of governments are using GAP. So very helpful information, and really delighted to know that this is the model will just continually be updated so we could see how these numbers change 2 years from now or whenever you do the next update again. Thank you very much. Thank you both, Joel and Alan, for your reports. Next, we have report from Rich Jones, FASB Report. Rich, I'm turning over to you.
Okay, great. Thanks, Manju. Good morning, everyone. Thanks for spending this time with us today so we can summarize some of our activities here in the first quarter. With me today is Deputy Technical Director Nellie Debler, that I know our trustees and many of those who follow our board meetings certainly have seen in the past. Nellie helps lead our staff, and we're going to walk through lots of different accomplishments in the quarter and since our last agenda outreach. And suffice it to say, we couldn't have accomplished them without Nellie and our staff's work on these issues. If you move to slide 74, I want to begin with really an update on where we stand as part of our last agenda reset. By June of 22, we had effectively reset our agenda based on extensive outreach with stakeholders. And that included not only adding new projects to our agenda, but actually making sure that the projects on our agenda were the ones that were most responsive to stakeholder needs and that they were appropriately scoped and targeted for completion. And this slide gives an overview of effectively much of the standard setting that came out of that reset agenda. Now, this is by no means all the standard setting that we've done over that period of time, but I do think it's a good time to reflect back on, have we accomplished and met the needs that stakeholders shared with us as part of that process. If you look in the left box, we have a column, final standards issued or expected to be issued. These are standards that we've either issued or that our board has voted to go to a final standard, where the only remaining step is our board reviewing the final drafts of those standards, but they voted to move forward with the final standard. Some of those projects included digital assets and expansion of income tax disclosures, segment reporting, disaggregation of income statement expenses, and the definition of a derivative. Moving to the right from there, clockwise, you'll see there's 3 projects listed where redeliberations are expected to be completed in 2025. That means not only have we done all the initial deliberations, we've issued an exposure draft, we've received responses to those exposure drafts, and our board's in the process of considering that input in making a decision on whether or not to finalize those projects. Interestingly enough, our board just a few weeks ago voted to move forward with a final standard on software. So that actually would move over to the left column if I were preparing these slides today. Environmental credits and government grants, those are 2 projects which will be coming back to our board for redeliberations. And I could reasonably see those being completed in the coming year, so this year. Moving down clockwise again from that, you'll see ITCs issued in 2024. These were 2 areas that were brought up as part of our last agenda outreach related to financial KPIs and intangible assets. The ITCs that we issued, that the comment periods are closing or have closed. This was really, the objective of this was to get additional information for our board to understand, is there a project there? And if so, what should the direction of that project be? These are certainly large scope issues. If you think about financial KPIs, that's a fairly encompassing topic. If you think about intangible assets, that's even broader. It's things you can't touch. But what should the future direction of standard setting be? Is there a role for us to play in those areas? Those ITCs will provide essential stakeholder input to our board to consider as we consider whether or not to add a project. And then finally, the statement of cash flows, which was also an output of that agenda outreach. We have a project on our technical agenda related to the statement of cash flows for financial institutions. And we have a continuing project on our research agenda related to the broader statement of cash flows and what changes could be made there to potentially make that more useful to investors. With that, let me turn it over to Nellie to summarize some of our activities for the first quarter. Nellie?
Thanks, Rich, and thanks for having me here today. So this slide, which is page 75, shows our overview of the technical agenda projects during the first quarter. So you can see that we had 15 projects on the agenda at the end of December and now down to 13 as of the end of March. The project that we removed from the agenda was related to the presentation of contract assets and contract liabilities for construction contractors. Specifically, the feedback that we heard there related to retainage, which is very common in the construction industry. And those provisions kind of provide some security to the customer to allow them to withhold part of what's billed by the company until certain project milestones are completed or the project is completed. But we got feedback from our private company counsel that the way those amounts were presented in the financial statements could be improved. So this had been added as a technical agenda project by the PCC and the board. And then we did a significant amount of research and outreach involving a lot of the PCC members and a lot of their stakeholders. And the PCC and the board concluded that this would be better addressed through staff guidance. So the PCC removed this from their agenda. In March, the board removed it from their agenda with the PCC's recommendation, and then the staff guidance was issued on April 1st. The project that was completed during the quarter was our clarification about the effective date for our disaggregation of income statement expenses project. That was issued as a final update in early January, so that project's completed, and we'll talk more about that project in the upcoming slides. And then you can also see we had one exposure draft during the quarter, so that's our codification improvements project, and we'll cover that in upcoming slides as well. You can see our note here at the bottom of the slide. We're continuing to make really good progress in all the projects on the agenda. Since the end of Q1, we've had another exposure draft. We've had 6 or 7 other projects move towards finalization. So again, the board's completing all the necessary decisions, and now we just work on finalizing the draft of the document itself. And we're really proud of the progress that we're continuing to make and really focus on making sure that continues. Unless there's any questions or anything Rich wants to add, I'll move on to page 76. So yeah, Rick.
Just real quick, thanks, Nellie. You know, and I suspect it may come up later in our conversation.
Yeah.
I just think it's interesting. It really tells the story of the process. When you look at the contract assets and contract liability project, stakeholders ask a question, you guys assess the information, the PCC just debates it, you send staff out to get outreach. Outreach comes back that says, you know, maybe we can do it better in a different way, and you pull the project back. It seems like that process is going exactly the way you want it to go, right? I mean, that's impressive, I think.
Yeah, that's absolutely right. And it's when we have to shift course like that for something like this, it can seem maybe like a change or like a disruption, but really it's, to your point, the process working, that we're being responsive to the feedback we're hearing from stakeholders, that we don't maybe need to go through the whole due process steps and kind of think about this as additional guidance or make it a requirement, but maybe we already have what we need essentially. So that really was stakeholder feedback as part of our process, like through our external review type process and other things like that, that was telling us that was the right course of action. So completely agree. Any other questions? Anything else to add there?
I just want to let committee members, we have several members here, trustees who are not on the committee participating. So thank you for your participation. And please feel free to ask a question or make a comment.
Absolutely.
Yeah, go ahead, Nell.
Okay. So looking at slide 76, as I mentioned, this is, we issued a final update on this project in January. And this relates to the effective date of one of the big final standards that we issued in 2024, which was disaggregation of income statement expenses. So that project requires entities to disclose additional disaggregated information about their income statement expenses into certain specified categories. And we really are expecting that to provide important decision useful information to investors. And shortly after issuing that guidance in early November of last year, we got a question about a nuance in the wording of how we describe the effective date. So specifically about distinguishing when the guidance is applicable in interim periods. It is, the board had intended this guidance to be applied initially for an annual period and then for the following year in an interim period. And the question related to how we articulated that. So we got this feedback, we discussed it internally. We thought we understood the board's intent for how this would work. We thought we had kind of tried to make that clear, but for the avoidance of doubt, essentially, we decided we should clarify this. And you can see we approached this as a standalone update to make this clarification. Now, you can see also that we had somewhat limited outreach on this project. We got 4 comment letters. So that's because, again, we felt like the board's intent for how this was supposed to work was clear. And we heard from comment letter respondents that they were good with us clarifying that. And we were trying to just make sure all the details match exactly what kind of the board had intended. So we're glad this is clarified. We're excited for companies to begin adopting this disaggregation guidance in 2027. And unless there's any questions about any of this, I can move on to our other due process document for the quarter. Seeing none. Okay, page 77. This is an exposure draft, again, we issued in January on a project we call codification improvements. So we've got a large body of accounting guidance. We're responsible for maintaining all of that. It's thousands of pages, although we no longer print books, and something like 98 different topical areas covered in the accounting standards codification. And we view the upkeep of this guidance as one of our most important responsibilities. That maintenance takes some time and effort. And to that end, we collect questions that we receive from stakeholders and kind of periodically batch them into one of these updates. So this document specifically has 34 distinct issues, and I do mean distinct. They're basically all completely unrelated to each other. And we think these issues are not expected to have a significant effect on current accounting practice or result in a significant cost to most entities. That's why they end up in a document like this. If we get a question that's likely to have a more significant impact on practice, that's the kind of thing that we tend to address individually. Let me just give you a quick example to illustrate the type of thing that's in this document. So in our topic 505, which relates to equity, there's two methods noted for how to account for an excess of repurchase price over par value when an entity is retiring treasury stock or repurchasing that. That guidance was from ARB 43, which was issued in 1953. And the original guidance in ARB 43 included a third method. That third method was in the current text, which was widely used in practice for many years. But in the process of converting accounting guidance to the codification, that third method had not been included in the codification. So at this point, we can't exactly say why that is, but we heard that feedback, we were alerted of this, and we are fixing it. So that's the kind of nature of this document. That helps provide some context for why our outreach on this project, this was outreach before it was issued for exposure. That primarily includes here practitioners and regulators, as you can see. And these issues, the nature of the type of thing we're including here really are such that they're best understood by practitioners that are working with the guidance on a daily basis, really in the weeds there. And with that said, it's important that these issues, as with anything else we're working on, important that these go through the board's full due process. We had our board meeting. It's now out for exposure. Pending our feedback that we receive on this, the board will look to finalize that. It'll have transition provisions when it's finally issued. But this, it's an important part of our process to make sure that we get feedback on these items.
Yeah.
Now, I mentioned there were. Sorry,
Nellie, maybe I'd echo that last point that Nellie made. We take any change to the codification very seriously. There's a due process associated with it. When you look at some of these, you may say, oh my gosh, why did they bother? But to be fair, any change to the codification, we go through this full due process to make sure that it's transparent to all of our stakeholders and they all have a chance to weigh in on it. And that's part of our responsibility. Go ahead.
Yeah. So I mentioned there's 33 other issues in this document. So in addition to the one I briefly mentioned, and I would be truly delighted to go through each of them, but maybe in the interest of time, unless there's other questions, I will move right along.
That's a nice way of saying you covered the most exciting of the 33 now. The trustees will appreciate that.
Okay. So looking at page 78 here, the first quarter ended a few weeks ago now. And we just wanted to highlight that we've continued to make really strong progress on all of the projects on the board's agenda. So this will be a bit of a preview in meetings later this year. We'll talk through these items in more detail when they're issued, when they reach their kind of due process milestone steps. But we wanted to share some of our kind of continued progress here. So already in the second quarter, we've issued another exposure draft. That's the accounting for debt exchanges, and that's an EITF project. We heard from stakeholders that the guidance on whether a debt exchange is a modification or an extinguishment is complex to apply and does not result really in decision useful information. So this guidance is specifying that transactions should be accounted for as extinguishments if certain criteria are met. So hoping that that is viewed as a simplification. And then the board has completed its initial deliberations and is working on drafting an exposure draft for another EITF project, which is the measurement of paid in kind dividends on equity classified preferred stock. So today there's not guidance in that area. Practice is somewhat mixed. So this would create guidance and kind of drive some consistency and comparability there. Continuing on, the board has completed redeliberations for 6 other projects that are moving towards their final stages. And actually, after we put together these slides, 2 of these items in this list have already been issued. So those are out there, final in the public. And then the board also finished redeliberations for another project that would get added to this list. So we're continuing to move through these items expeditiously. And I'm happy to answer any questions, or I can let Rich walk through an overall picture of the state of the technical agenda.
Okay, thanks, Nellie. If you move on to slide 79, and while at the preparation date of that slide was around April 30th, since that date, as Nellie mentioned, we've continued to make progress. So as of today, we have 12 projects on our technical agenda. 5 of those have been voted to move out as final standards. 4 of those are in active redeliberations, meaning that the exposure draft had already been issued, the comment period closed, and the board's in the process of considering that stakeholder input and making decisions on whether or not to move forward to a final standard or other steps. We have 1 exposure draft that's out for public comment, 1 exposure draft that will be issued later this year, and that leaves 1 project in initial deliberations. Practically speaking, what that means is it's very reasonable to expect that significantly all, or substantially all, if I want to use an accounting term, of the projects on our agenda will be completed at or about the end of the year. So the question then becomes, well, what's next? I wouldn't worry about that. I don't think that means that we have nothing to work on. We have our normal process whereby stakeholders raise issues to us. We identify issues internally and add them to our agenda. But if you move on to slide 80, slide 80 also gives you an overview of different ways that our agenda is seated in the future. When it comes to research projects, those are projects that are on our research agenda where we're effectively using the research agenda to communicate and to gather additional information as to potential future technical agenda projects. I previously mentioned the financial KPIs, invitation to comment, or the intangibles, invitation to comment. Those would be 2 examples. During the quarter, we added a project to our research agenda related to hedge accounting. Hedge accounting, our hedge accounting standards have been out for almost a quarter of a century now. But once it was initially issued 25 years ago, it was not a one and done by any means. It's been significantly amended through additional standard setting, we had something called the Derivatives Implementation Group that did significant amendments to it. And so when you look at the standard that we have today compared to the standard when it was originally issued, it's quite different. And we received pretty much a continuous stream of requests to make additional changes to that model to facilitate better reflection of economics and hedging activities. So as a board, when we look at that, a fair question is, should we keep amending and fine-tuning that model, or do we need to step back and take a fresh look? And so what you see is we've added to our technical agenda, to our research agenda, a project related to hedging. Our objective there will be to work towards a preliminary views document. That would be a document issued by our board, laying out a potential model. Now, that could be based on the current model with changes. It could be a new model. That's something that we'll determine as a board. But it is a board document, so it's something that we'll be working towards, where we can really get some input on what if we were to pursue change in that area. Can we come up with something that's better than what we have today, and really a better point to build off of than where we are. The other items on that research agenda that I would mention is the invitation to comment.
Hey, Rich,
Yes.
you have a question from Trustee Pat.
Oh, sure. Hi, Pratt.
Hey, Rich, how you doing? Certainly a tremendous amount of really good work that's going on. On the comment that you just made on hedge accounting. So on a topic like that where it's incredibly complex, it's, lots of layers, that have been built up over the time of of hedge accounting. How do you, when you do the research project, how do you weigh and take into consideration the view of stakeholders? Because there's going to be undoubtedly some that like it the way that it is, others that would prefer a rewrite and kind of a reassessment of the entire topic, and lots of things in between. How as a board do you take into consideration those various stakeholder views? How do you weigh them? And ultimately, it's just a conceptual question.
Yeah.
How do you sort of get to a conclusion in terms of approach?
Yeah, and Brad, it's not easy, right? I think that, and I think you summarized a lot of the different views that we'll hear, right? I've got a system and a process in place that works with the current standard. I just need you to make these 3 other tweaks and then everything will be fine, right? Or I really want to start all over again, or I only want to change this type. One of the reasons we edit it to the research agenda versus bringing it to the board for the technical agenda is so that we can flush some of that out. And the other benefit of a preliminary views document is, first off, we're not going to develop it in a vacuum. We're going to do outreach with stakeholders to get input before we draft something. And it's really to explore, can we make it better? And when you think about making it better, right, it could be reducing cost and complexity, it could be better reflecting the economics. It could make it so that you don't have to hire 5 experts anytime you want to put a hedging program in place, that you should be able to do it with a reasonable CPA should be able to do it in a reasonable manner. So it could be a combination of those things. The preliminary views is a way that we can put out a framework and get a reaction without having to answer every single underlying question. Because as you can imagine, with something like hedge accounting, we could talk about fair value hedging, but they're going to have all the questions and all the details beyond it. So I think this is really our board looking to say we recognize there's going to be a lot of strong views here. We're going to need input from preparers, from auditors, from investors on what's working and what's not, and to see if there's a better way to do it effectively.
Yeah, well, thank you, Rich. And by the way, I think it's great that as a board, you all take into account not just technical purity in terms of the answer, but also practicality and reducing complexity.
Yes, standards that no one can apply aren't really helpful to anyone,
Yeah.
right? So, that level of accuracy is important. The other key thing for me here is recognizing our future board turnover. We have 3 board members leaving in the next 2 years. I specifically talked to the 4 board members who will be continuing to understand their support for this project, because we're going to have a fairly substantial change. And to be fair, a new hedge standard wouldn't go out in a year or 2. It will take longer than that. Making sure that there is agreement, and there was in that outreach that I did. Couple other items here. Obviously, the Private Company Council, you'll hear the update from the Private Company Council. We continue to work closely with them, and very often they do refer projects to us to consider for standard setting. The EITF, I think it's been just under a year since the newly reconstituted EITF has been operating. The project that they added to their agenda is the 4th project they've added to their agenda. So far, the 3 projects that they have completed, the board has decided to add to our agenda, and we've moved forward. And in fact, we just finalized the first project from that newly reconstituted EITF just the other day. So it's a little early to declare victory, but I do think that the revised operating procedures and membership of the EITF is certainly paying dividends. As a reminder, the EITF, while they control their own agenda, the output from the EITF is simply a recommendation to the board to add a project to its agenda with a recommended solution. The board then makes all decisions related to that project and follows our full due process. But it's worked out very well, a very talented group in identifying issues that, to be fair, wouldn't probably come to our board's attention for quite a while, but that the EITF is on the cutting edge of. So that's been very helpful. And then finally, we do have 2 projects in post-implementation review, which I would give an update on. So in short, between the EITF, the PCC, our normal agenda process, and the agenda outreach process that we have in process, I would expect that you will see a continued refresh of our agenda in the coming year. Moving on to the next slide, slide 91. You'll see we have two post-implementation review projects on our agenda. We had just recently completed the revenue recognition PIR. The leases PIR, we do expect to complete later this year. That's what we're targeting. And it is following a similar format that we use for the RevRec PIR. We had a discussion just yesterday with our Public Markets Advisory Committee to get input on the leases PIR, and we'll be having additional outreach with other advisory committees throughout the balance of the year. The credit losses PIR is a little behind that. We expect to wrap that up sometime next year. That's what we're targeting. But we did have standard setting activity related to the credit losses PIR already. The purchase financial assets standard that our board voted to move towards a final standard just last week is in that listing, as well as a project that came up from the PCC related to the application of the credit loss standard to trade accounts receivable. That's how it originated via the PCC. So with that, that's the update on our PIR activities. I included a recurring slide here at the end on focus areas. Just once again, communicating what we're focused on, and it's setting the right agenda, performing the right outreach to come up with the results that are most responsive to our stakeholders. We have been definitely focused on timeliness of standard setting, recognizing that standards that are never done don't help anyone. But scoping them appropriately and completing them on a timely basis has been a continued focus of ours. And finally, I'd emphasize the embracing all stakeholders. For accounting standards to work and be successful, accountants have to be able to apply them, auditors have to be able to audit them, and they have to provide decision useful information to investors. All three of those have to work. And our outreach brings those parties together, making sure that we're coming up with the best solutions for our capital markets. So with that, Manju, that concluded my prepared remarks. I don't know if there are any questions.
There's a question from Trustee Reisig.
Thanks, Manju. Rich, you mentioned the outreach that you do, and that 25 has the agenda consultation. You got a lot of stuff coming up, I think, where you'll be asking respondents, right, to provide you input. I know you got a webinar coming up. I know you got Engage coming up. Can you talk a little bit about what you have coming up?
Sure. So we do have we are effectively a stakeholder output machine, I could almost say, Rick, in the sense that whether it's and it's by different stakeholder groups, to be fair, right? We recognize whether it's the PCC Engage conference, whether it's a webinar that we're doing for the not-for-profit and academic communities. We also benefit in that, when you think about the large firms communicating our activities, it's not unusual for one of them to do a webcast and get 20,000 people on it. So we are also able to leverage those avenues. By the same instance, I know Joel walked through a fairly extensive listing of what the GASB does from an outreach perspective. We also use many of those vehicles.
I think I don't see any other questions. Again, thank you, Rich and Nellie, for your reports, but also Rich for the board to do so much churning and burning and moving projects along. Enormous effort there. So thank you. All right. So next we have report from Sue Cosper. Sue is the FASB liaison to the PCC.
Thanks,
Good morning,
Manju.
Sue.
Thanks, Manju, and good morning, everyone. Our last PCC meeting was held on March 6th, and the PCC report is in your materials beginning on page 83. The March agenda and the meeting recap also begins in your materials on page 127. A couple of highlights from the March meeting. The PCC completed their redeliberations on the proposed ASU that would allow a practical expedient and accounting policy election for private companies when applying the current expected credit loss model to trade receivables and contract assets. that arise from a revenue recognition transaction or that arise from a business combination. This is the project that Rich just highlighted. The board endorsed their recommendations on March 26th and extended it to not-for-profits and for the practical expedient to public companies. And a final standard is expected later this year. Nellie also talked about the FASB staff educational paper, which was clarifying the presentation and disclosure requirements of contract assets and contract liabilities for construction contractors. So I won't go into that in that much detail, but the PCC had a wonderful discussion about that at the March meeting and talked about their path forward and whether the paper accomplished solved the problem that they had highlighted, which it did. And as a result, the PCC removed that standard setting project from their agenda. And it, of course, was issued on April 1st. And the PCC also continued their discussion on PCC agenda priorities. They asked the FASB staff to provide further research on several topics for the June meeting, including subjective acceleration clauses in determining debt classification, revenue recognition for short cycle manufacturing arrangements, and weighted average disclosures in GAAP. The PCC also discussed recent activities and a variety of other FASB projects and initiatives like PIR, for example. And maybe just turning to town halls, liaison meetings, and other activities. Our next town hall, which is the third so far this year, we talked about 2 at our last Oversight Committee meeting, but our next one will be held in conjunction with the AICPA Engage Conference in June. From the PCC, Jerry, Holly Nelson, David Finkelstein, and will be presenting. And from the FASB, myself and Vice Chair Hillary Salo will be presenting and attending as well. In terms of liaison meetings, the PCC met with the Technical Issues Committee of the AICPA just this past Wednesday. I would say the meeting was very productive. It focused on the TIC's preliminary thoughts and their response to the FASB agenda consultation invitation to comment. And they also provided feedback to the PCC members in attendance on the PCC's agenda priorities. So maybe just a couple of other things. The inaugural edition of the PCC annual report was issued on March 13th and is available on our website. It includes a summary of PCC activities and stakeholder engagement in 2024. You kind of already alluded to it, Rick, but we're hosting a webinar for private companies and not-for-profit entities on May 29th. Adam Roark from the PCC will be presenting along with Fred Cannon, Christine Bodison, and the FASB staff. And also, we oftentimes do educational sessions for PCC members in between PCC meetings. And as a result, we hosted an educational session for PCC members on the FASB's agenda consultation document in anticipation of a discussion about that in the June meeting. The next PCC meeting will be held in Norwalk on June 26th and 27th. And I guess I'll just pause here for any questions you may have.
Thank you. Sue, are you done?
Yes.
I think that I'm hearing Sue, but
I don't have anything more. If there's any questions, I'm happy to take them.
okay. Well, thank you, Sue, for your report. Any questions for Sue? All right, if not, then we'll move on to the next item, which is report from a couple of FAF trustees, Rick Reisig and Luis Aguilar, on their PCC meeting observations from the March 6th meeting. Rick, if I can turn it over to you first, and then we'll hear from Luis Aguilar. Go ahead, Rick.
Thanks, Manju. Again, they're all good meetings. The one thing for those who might be listening and haven't ever had the chance, if they have an interest to participate as an observer to the PCC meetings, they're always informational, educational. I get something out of it every time I observe the meeting. The last one, I will say, one of the meetings a year, not unlike many of our groups, is virtual. And the March 6th meeting was a virtual meeting, which from an observer standpoint as you're used to hearing interaction and understanding how people comment on and chime in on different topics, it seemed a little more subdued for some. And that's just the nature of a virtual meeting. And, I know they don't meet in person in June. And I think as always, the conversation will be very spirited and robust as always. But that's just one of the observations that I had that I wanted to comment on, I think. Secondly, and it's not because she's here, but I just wanted to mention, I don't know if I've ever mentioned it before, but my God, Sue does a great job as a liaison. She really does, and Rich is always very supportive of it, but Sue has such a history with the PCC, and Sue, you just got a great rapport with those folks, and you're very supportive. You guide them as Rich does too, but I just wanted to mention that from our position as trustees, my God, you're just a great liaison, I think, in communicating the desires of the board, and again, relaying the thoughts of the PCC. Kudos to you. One other thing I wanted to mention, I always try to comment on some of the staff, because we have great staff that help introduce the topics. They certainly do, to the FASB. They work on those projects. They do for the GASB on their projects. With the PCC, they always introduce the topic for the members to then weigh in on. And the one that I highlighted, and of course, in a virtual meeting, it's somewhat more difficult to know which staff person actually is commenting or introducing the topic, and then responding to the questions that the PCC members have, which isn't an easy endeavor either, because they have to be really the experts on the topic in responding to the question, maybe asking another question in response to the comment of the PCC members. But the one that I highlighted for me, I think, was Brandon Brown, who talked about the credit loss project. And to me, I thought he was great in responding to the PCC questions, very conversational, knowledgeable, thought-provoking. And so, I mean, our staff does a great job, so that's really all I have for my observations, but it's worthwhile as always.
Louis?
Thank you, Margie. And I think Sue and Rick have done an incredible job summarizing what the PCC did. I thought it was from my perspective, first PCC meeting I've attended. I thought it was a busy agenda, a lot of interesting and hard issues to discuss. But I will say that I thought all the board members, I mean, there are challenges to the virtual meeting, which I concur with, that Rick mentioned. But I thought that the PCC members who were participating were very informed. They were very active participants. They clearly came to the meeting having read and digested the information. It's not like they were hearing it for the first time. They participated, I thought, productively. They came ready, willing, and able to do so. And there was some good back and forth exchanges. I thought it was a very productive meeting, and I've got nothing to add to Rick's and Sue's comments. I was glad to have participated.
I'll appreciate it. Thank you both. Rick, if I may, again, thank you. Just as you mentioned, Sue being the FASB liaison to PCC. As many of you know, Rick Reisig is FAF trustees liaison to the PCC. And I'm just always so impressed and learn from your observations when you report out at our meetings. You attend every PCC meeting and you share your observations with us. So thank you for that. All right. Next, we have observations from trustees in the last quarter. Trustee Beth Pierce and Lynette Kelly observed GASAC meetings on March 17th and 18th. That meeting took place over a 2-day period. And Beth also observed a GASB meeting on March 18th. So I'm going to first turn it over to Lynette, since you observed March 17th, day 1 of the GASAC meeting, and then we'll turn it over to Beth.
Great. Thank you, Manju. And I'll be brief. I also want to give kudos to Lisa Parker, who so ably supports the GASAC. She is terrific, as is our chair, Rob Hamilton. So great leadership on the GASAC. We had a couple new organizations represented at the GASAC this year. And I just wanted to note that the entire GASAC came to the table with such professionalism, such seriousness. The new organizations were very well represented and totally engaged in the discussions. They received an update from John on what's happening at FAF, and then from Joel about the GASB update, and spent a lot of time on revenue and expense recognition, voluntary digital reporting, and what I find to be very interesting is the going concern, uncertainties, and severe financial distress. So really great conversations around each of those three issues. And again, noticed how much the GASB members really listened, asked probing questions, and really solicited the views of the GASAC. So thank you.
Thank you, Lynette. Beth?
Yes, thank you. Before I start, I just wanted to say one thing about the gap utilization project. I just want to
Yes.
echo the comments, Montague, that you made, and Rick and Ed. Well done. And I just want to say that to Joel and his group. I actually attended both the 17th and the 18th days for the GASAC.
Oh, okay.
And I would agree with Lynette's comment about folks, their involvement. They get an incredible amount of reading material to prep for these meetings. I mean, it is mind-boggling. I used to be on GASAC, and it was my homework assignment for a couple of days just to get through it. They read it, they digest it, they discuss it, they work with their stakeholder groups to get information. This is a hardworking group. They're new members, as Lynette mentioned. I wanted to again thank them, as well as the folks that are existing members on making them feel welcome, number one, and working together to get moving. As I said, they hit the ground running. So that would be an important part of this, is the way that new members interact with the existing members. We have they have, I was on GASX, so I tend to say we, my apologies. They have a mentoring program, so the folks that are new are paired up with someone who's been there a little bit, and I think that helps the process. My second comment would be that the agenda is in sync with GASB. Lynette mentioned some of the five primary subject matters that were discussed in the March GASAC meetings flowed into the meeting agenda for the GASB. So they were well timed, so you could get input that then flowed into the meetings that occurred the next 2 days after GASAC. So it's a well-oiled machine that's moving in the right direction and streamlined in terms of that approach. The March meeting has one particular item that is unique each year, which is the prioritization process. Every year, GASAC members are given a list of what's on the technical agenda, what's going on, research agenda, and they're asked to take a look at that, the research materials behind it. And again, it's pretty much like a large catalog, and they look at that, and they can add their own, and they work.
Oh, okay. I mean, that had happened to me before, and someone commented that it was just me.
I think it's just states that begin with V.
Good, Ed. Maybe Beth might come back online. So why don't we move on to the next item? I think we have who's next here? Let's see. Oh, we have Trustee Pratt Bhatt. Pratt observed the FASB meeting on March 26th. Pratt,
Yeah,
can I turn it over?
please.
Thank you.
And thanks, Manju. Just to introduce myself, I'm a new trustee. I just joined in January, so it was particularly good for me to observe the FASB meeting. I'm a prior preparer, so it was interesting, right? It's certainly a different, I'd say, broader lens, as you observe the meeting. I had 4 observations, just high-level observations. One, and I knew this before, but you know, just watching it from a different lens, I was particularly impressed with the deep expertise and the commitment to the topics of the that the FASB staff had. It's and a couple of comments have been made already about just the quality of the staff. The commitment they have to these topics is really incredible to watch. So it's really pleasing to see that. Secondly, this is it was, for me it was a really good demonstration of just critical due process, but while also being efficient. So there's certainly an interesting point there that, hey, good due process can lead to efficiency, and you know, both can coexist, right? So that's that was great to see. Next, the role that the chair plays, the FASB chair plays in soliciting the input from the board members and the staff, and really, you know, getting all of the issues and considerations and so forth on the table. It takes quite a bit of skill to do that. So hats off, Rich, in the way that you do that, and to the FASB board members. They certainly come with their own independent views that have been carefully researched with the staff and through their own readings and so forth. That said, they also carefully listen to the points of view of the FASB staff and of each other. And that's particularly good to see. It's critically important. It's doing your own research, coming with your own independent perspectives, but then also being open to feedback and soliciting that feedback. So I thought it was overall, you know, excellent meeting. Great to see the process in action. So I'll leave my comments there.
Thank you. That was great. Beth, I'm looking at Beth if she's online again.
Yes, apparently I was offline for just a bit. My apologies there.
No.
With respect to the GASB meeting, which took place on the 18th and 19th, I'd like to make a couple of observations. First, the GASB makes extensive use of the GAS Act feedback, which I mentioned earlier with the GAS Act presentation. They elicit this through stakeholder outreach and through other comments. They really are tuned into what the population is needs and wants to communicate to them. The GASB doesn't just listen. It takes this information and puts it into its decision-making process. I can't tell you the number of times that I would hear, well, the GASB folks thought about this or brought this to the table. And it was really good to hear, because it means that the work that those folks do is reflected, and the work that's done through comments and outreach is also part of the decision-making process. The GASB continues to make effective efforts to spread out its workload a bit. They recognize that governments are under a lot of stress in terms of resources and turnover, and they really work very hard to spread that out and to kind of stagger comment periods and implementation dates to accommodate that. And again, this is a recognition of the limited resources, especially for smaller governments. And GASB has continued to emphasize a review of the benefits of a standard versus the cost for a government. This seems to be an underlying factor in all of their deliberations. You hear it either directly or within the context of a particular subject matter. The bottom line is, does this project add value? And I think that that's an important question that that GASB brings to the table on every single discussion. GASB members are clearly subject matter experts. They deliberate in a respectful manner, respecting different viewpoints. And my bottom line is that the statement process is well served by their membership.
Thank you, Beth. Again, thank you to all the trustees who observed all these various meetings. It's really helpful to hear your observations. Appreciate that. And with that, we've now reached the end of our public session of the FASB Standard Setting Process Oversight Committee meeting. Again, many thanks to those of you who joined in for today's webcast. We really appreciate your participation. Please note that the next Oversight Committee meeting, public meeting, will be held virtually on Monday, August 18th. And hope to see you then. And thank you, everyone, and have a great day.